The rebranded form of a digital currency helped cause a wide range of market issues recently, yet what is land-exempt lari, LUNC? We should investigate and see what we can realize, and furthermore cast our eyes over a portion of the land-exempt lari cost forecasts that were being made starting around September 8, 2022. Land-exempt lari made sense of. Land-exempt lari, realized by its ticker handle of Lunc, is the local badge of the land-exempt lari blockchain. This is the equivalent blockchain, previously known as Land, LUNA, which was made by crypto business visionaries Daniel Shin and Du Quan in 2019 to help make a stablecoin, known as terra, UST. USTs were stamped by consuming Luna and could likewise be traded for Luna. That's what the thought was, assuming the UST esteem transcended $1, the same worth of Luna would be cinched, which stamped more UST, making it less important. Then again, on the off chance that the UST cost fell beneath $1, they were traded for Luna, which thus made UST more significant. This was just fine, until May 2022. Around then, when its environment saw capital flight, following the deep gain of UST and a dive in the cost of what was Luna. Financial backers who were once attracted to approach 20% profits from UST stores started to pull out and sell their UST tokens in an excited exit, as USD started losing its dollar stake on May 9, 2022. As more USD holders sold their tokens, Luna, which was intended to be an adjusting token to assist with keeping up with UST's dollar stake, saw excessive inflation. All between 9 May and 12 May, Luna lost virtually its worth as it dropped by 99.98% from about $64 to $0.0087. UST likewise plunged and, with the breakdown causing strife in the crypto market, something must be finished. The Luna establishment gatekeeper declared that there would be a hard fork, with the new blockchain kept on as Land, with another type of a Luna coin, Luna 2. In any case, these plans were quickly different and it was declared there would be a new blockchain. It was likewise declared that the first type of the blockchain would be known as land-exempt lari. In the meantime, USD would be rebranded as USTC, and was intended to get away from being an algorithmically upheld stablecoin to being one supported by security. The principal block of the new land blockchain was stamped on 28 May and, from that point forward, what was whenever Luna has become Lunc, a digital money run and worked by its own local area. Presently we should analyze the Lunc cost history. While past execution ought to never be taken as a sign of future outcomes, understanding what the coin has done in the past can give us some helpful setting with regards to either deciphering an all-around existing land-exempt lari value expectation or making one of our own. While we will zero in on the Lunc coin as it has existed since May 2022, taking note of the features of its past incarnation is significant. When Land previously went on to the open market in July 2019, it was worth around $1.30. This cost before long ended up being something of an overvaluation, and it before long tumbled to under $1, where it remained until mid-2021 when it broke more than $1 in January and moved to arrive at an occasional high of $22.33 on 21 walk. There was a drop-off throughout the next months, and a revisitation of structure later in the year, hitting a high of $103.33 on 27 December. What was then known as Luna partook in some striking cost activity in the initial not many long stretches of 2022, arriving at an unsurpassed high of $119.18 on 5 April. From that point forward, however, things turned out badly and it sank to an untouched low of $0.00001675 on 13 May. On 28 May, the day that new Luna appeared and the former one became Lunc, the coin shut the day at $0.00009566. From that point forward, there have been highs and lows. The news that the Celsius, CEL, crypto loaning stage had dropped withdrawals affirmed the bear market, sending it down to a low of $0.000517 on 18 June. From that point forward, however, There was some recuperation and, on 29th of June it came to an intraday high of $0.001649. There was some backup after this, however in late August the cost shot up and it shut the month at $0.00022252. There was further gains after the declaration of recommendations to present a 1.2% expense on exchanges on the blockchain, and things were helped again when the KuCoin, KCS, trade said it upheld the plans. By September 8, 2022, land-exempt lari was worth about $0.00052. With 6.15 trillion Lunc available for use out of an all-out supply of simply over 6.9 trillion, it had a market cap of around $3.2 billion, making it the 23rd biggest crypto by that measurement. Land-exempt lari cost forecasts. With that all said and done, we should investigate a portion of the land-exempt lari cost forecasts that were being made on September 8, 2022. It is critical to bring up that cost gauges, particularly for something as possibly unstable as digital money, are regularly off base. Likewise, long-haul crypto value forecasts are many times made utilizing the calculation, and that implies that they can change immediately. To begin with, had a Lunc crypto cost forecast that saw the crypto possibly exchange at around $0.000657 this prior year, coming to $0.00112 1 year from now and $0.00156 the year after that. By 2025, the site said Lunc could be valued at $0.00206, prior to dropping to $0.00177 the next year. In 2027, the gauge proposed the coin could be valued at $0.00244, moving to $0.00349 by 2028 and possibly shutting the 10 years at $0.00495. The site then, at that point, proceeded to make a land-exempt lari cost expectation for 2030 that said it could exchange at $0.00698, prior to contending it might actually remain at $0.00947 in 2031. While considering a Lunc coin cost expectation, it's critical to remember that digital currency markets remain very unstable, making it challenging to precisely foresee what a coin or token's cost will be in a couple of hours, and, surprisingly, harder to give long-haul gauges. Thusly, examiners and calculation-based forecasters can and do misunderstand their expectations. Assuming you are thinking about putting resources into digital currency tokens, we suggest that you generally do